hear me too. Okay, great. Before we went on the break, we were talking about setting up your portfolio as a beginner. We're also talking about your first steps in investing in digital assets, and we said that the first thing you should know is that you cannot buy cryptos or you cannot trade cryptos with your traditional banks, and so you need to come into the blockchain ecosystem where you have centralized exchanges and decentralized exchanges. And the next thing we examined was how much of your portfolio should be in digital assets. And we have said that, or we have established the fact that the crypto space is extremely volatile. And this is why financial analysts have an aversion for it, or they seem to have an aversion for it. And this is also why you would need to spread your risk in order to mitigate it. All right, across different classes of assets. And we'll give an example. We said that your ideal investment portfolio, now not just your crypto portfolio, your general investment portfolio should look like something like this. You have cryptos, you're investing in forex, you have stocks, foreign stocks, of course, and then you probably have an investment in agriculture, maybe an agricultural scheme, and real estate, and the like. So what this does for you is to mitigate risk and balance your portfolio. It's like a hedge. You're hedging your portfolio. Okay, so if you're just joining us, this is what we've covered, and I hope you can catch up. So the next thing we're going to be looking at is why you need to diversify your assets. Now, this is the third headline that we're looking at tonight. So why do you need to diversify your assets eventually? I already touched on this, all right? The number one reason you need to diversify your assets is because every investment is risky. I already said this, that regardless of what you're investing in, whether it's crypto, whether it's forex, no matter what you're investing in, even if you're doing drop shipping, all right, every investment is risky. So to mitigate your risk, that is to reduce your risk or to manage your risk, experts recommend that it's important to maintain a diverse portfolio, all right? You shouldn't invest all your money into one asset class. It's not wise to invest all your money into real estate, all your money into stocks, all your money into agriculture, all your money into oil and gas. No, spread it, all right? You spread it between different classes of assets. Okay, so this is the reason why you would need to diversify your portfolio. Okay, now let's narrow it down to diversifying your crypto portfolio. All right, as a newbie, it's not wise. We've talked about general investment. Now we're talking about your portfolio as a crypto investor. It's also not wise for you to just take all of your money, that chunk of your money, and invest alone in Bitcoin. Now, this is not just because the market is risky. For heaven's sake, Bitcoin just crashed from about $60,000 to $30,000. That's like 50%. All right. So imagine if all your investment was in Bitcoin. By now, you'd probably be crying blood. Okay, that was on a lighter note anyway. But then you need to diversify even your crypto portfolio. It is never safe to put all your eggs in one basket. This is a traditional saying. This is a saying that most of us have known from the beginning, but I think it applies most when it comes to investment, Even though some persons will always say that saying also applies to relationships. Don't put your egg in one basket. I feel like that's a con man saying when it comes to relationship. Anyway, we're not talking about relationships tonight. We're talking about cryptos. So yeah, let's focus on cryptos. So when it comes to investment generally, do not put your eggs in one basket. It is not safe. So when you're investing in cryptocurrencies, don't put all your money in Bitcoin, or put all your money in Ethereum, or put all your money in BNB. It is not safe. You need to diversify even your crypto portfolio. Okay, so how do you go about this? Now, let me tell you one reason why you need to diversify your crypto portfolio. Because if you check the coin market cap, now, if you're familiar with cryptocurrencies, or even if you're new, you should know that the coin market cap is like your Google search engine. What the Google search engine is to the internet is what coin market cap is to crypto. So it's like a huge library where you can get any information about any token, any coin. So when you go on coin market cap, you can see all the coins, like virtually everything on coin market cap. You get a lot of information. Okay, so now apart from seeing all the tokens, all the coins you can invest in on coin market cap, you will notice from coin market cap, if you study it properly, that there's still a lot of room for growth in this space, like in the cryptocurrency space. And this growth is going to be driven by these coins. After all, it's these coins that make up the ecosystem. So a smart way to reap the benefits of the growth in this ecosystem will be to diversify your portfolio and invest in some of these other tokens, some of these altcoins, apart from Bitcoin. Okay, and this is why you see that a lot of people, a lot of I don't know if you've been in this space, you'll be familiar with altcoins. You hear a lot about altcoins. You've been wondering, I've not heard this coin before. Which one is ETC, Ethereum Classic? Which one is this? Which one is that? Which one is ONG, ONT? So many coins out there. These are altcoins, and you know what? These altcoins, we're going to be talking about what's it called now? We're going to be talking about their market cap and all of that. So you see why some of these altcoins are even more profitable than this Bitcoin and Ethereum that everybody talks about. All right, so you need to diversify your portfolio amongst these tokens so you can reap the benefits of this ecosystem. Now, how do you begin your investment journey in the first place? So the first thing you want to do is that you want to take a look at the market cap of a few currencies that you've selected or that you feel like you're interested in. Typically, let's say I want to invest and I have 1 million naira. So I've registered on Binance and all of that. I've gotten everything right and I want to invest. So how do I find the coins to invest in? Now, this has to do with a lot of research. If you're not in a paid community where you'll be giving recommendations on what to buy and what not to buy, if you're going to be a lone ranger, if you feel like, oh, I've got this, I want to do it on my own, then I'm telling you what you need to do. Okay, so the first thing you want to do is select currencies. Maybe you could just do a bit of research and find out what are the popular cryptocurrencies, what are the profitable cryptocurrencies, and you probably would see BTC, Ethereum, BNB, Bitcoin, and all those popular tokens, Tron, and all of that. So as soon as you've gotten a handful of these tokens, maybe 10 of them, now the next thing you want to do is to check their market capitalization. Okay, so you need to check the market cap of all these currencies. How do you do that? You go to coin market cap. I just told you that what Google is to the internet, coin market cap is to the Bitcoin ecosystem. Okay, so you go to coin market cap and you check their market capitalization. Now, in simple terms, now to a layman, what market capitalization means is basically the total value of coins, the total supply of that particular token. Okay, so if you're checking the market capitalization of Bitcoin, you're trying to see how many Bitcoin has been mined so far. All right, how many Bitcoin do we have? What's the total supply of Bitcoin? Okay, so if you want to take it more technical, if you want to go more technical, you can say that it's calculated by multiplying the number of coins in circulation by the current market price of one of that coin. So if you wanted to calculate the market cap of Bitcoin, you just say how many Bitcoin do we have in circulation multiplied by the current price of Bitcoin. It gives you the market capitalization. Okay, so now in summary, what the market cap tells you is the relative size of a particular cryptocurrency. Okay, so it tells you the size of Bitcoin, size of Ethereum, and all of that. Now, why would you do that? Because you might be wondering, why do I even need to begin from here? I'm a beginner, for heaven's sake. Why do I need to start with some of these technical details? The reason is because the market capitalization of a coin helps you to know how volatile that coin is and inevitably how profitable that coin is. Now, as a general rule, lower cap coins are more volatile and more profitable. Higher cap coins are less volatile and less profitable. Remember, we said from the beginning that the first rule of investing, or the first thing you must take note of as an investor in any industry, is that high risk equals high reward. All right. low risk equals low reward. So bringing it down to market cap, the higher the market cap of a coin, the less risk is involved, the less volatility, and the less profit. Now, we're still going to examine the type of market cap, and all of that. But you should know this, just note it somewhere in your head, that higher market cap coins are less volatile and are less profitable. Now, some of these high cap coins are Bitcoin, Ethereum. These are large cap coins. And so the volatility is low compared to some of those other tiny assets, especially the altcoins. Okay, so you need to first of all know this, because I said something initially that regardless of the rules of investing, what you invest will still depend on your appetite for risk. Now, why am I saying, why is it necessary for you to check this particular fact as a beginner? Because if you are a low risk person, it helps you automatically to know the kind of cryptocurrencies to invest in. So if you have a low risk appetite, you probably just go for the high cap coins, all right, because they are less volatile, all right, and they have less risk. So if you're a conservative investor, you just say, okay, fine, I'm going to stay here. I'm going to stay with Bitcoin. I'm going to stay with Ethereum because they're less volatile and they have lesser risk, even though the reward is small, but I think I'm fine. Okay, so automatically this just solves your problem. It gives you a straight divide between investors. It just helps you to differentiate between the conservative investors and the risk takers. Okay, so that is number one. You want to check the market cap of the coin. Now, if you are not a conservative investor, if you're a risk taker, or if you're in the middle, some persons are neither averse to risk or nor have a big appetite for risk, so they're just somewhere in the middle. So if you're somewhere in the middle, actually your portfolio should be like a combination of both of them. Okay, so if you're that middle kind of investor, you should have maybe you should just split your portfolio into 50-50, 50% to high or huge cap coins and 50% to lower cap coins, so it's balanced. All right, you have 50% in high risk tokens and 50% in lower risk tokens. So if you are a middle kind of investor. Okay, so I hope you're following. If you're following, if you're still here, if you're getting value, just indicate in the Zoom chat box, and so we can go on. We actually don't have so much time and we have a lot to cover. Okay, so now what are large cap coins? Large cap coins are coins with a market cap of 5 billion and above. All right, so you can just after this class or right now, if you can just go on CoinMarketCap and check Bitcoin, check the market capitalization. All the information you need is there, right there on CoinMarketCap. If you don't have the application, you could just download from your Play Store or wherever you download from, and just check the market cap of Bitcoin, and you understand practically what I'm trying to explain. So large cap coins are coins with a market cap of 5 billion and above. Medium cap coins are coins with a market capitalization of 250 million to 5 billion. So it's ranging between 250 million to 5 billion. Now, low cap coins, which are the most volatile and the most profitable, are tokens with a market capitalization of less than 250 million. Now, if you watch properly, if you've been trading cryptocurrencies, when you are introduced to a project, they'll always tell you about the market capitalization, and you will notice that many solid projects that you are recommended, all right, that are recommended to you always see something very significant. Low cap coin, market capitalization 10 million, market capitalization 20 million. So wow, this project has plenty room for growth. All right, this project is going to do well. It has massive room for growth. Now, the truth is, projects that do 10x, 100x, 1000x, these are usually low cap coins. They're, like I said, they're the most volatile, but they're also the most profitable. When it comes to low cap coins, you see tokens doing times 50, times 100, times 1000, times 2000. All right, but then they are very risky and they're very profitable. Never forget this as an investor. I stated earlier that Bitcoin, Ethereum, Bitcoin Cash, some of these popular tokens, they are large cap coins. That's why you see that they're not extremely volatile. Okay, you can see the volatility, or the rate at which these coins grow is not, they don't grow exponentially in a short time. Now look at the time it took Bitcoin to move from where it was to where it is. It's not 1 month, it didn't happen in 2 months. Okay, so these are low cap coins. High cap coins. They have lower potential for growth, but they are very stable. Okay, so they can bring some balance to your portfolio. Now, someone is asking, what is your portfolio? Your portfolio is like your file. You understand? It's like your investment. Your, how do I put it now? It's like your collection of coins, your bag of coins. We call it bag in cryptocurrency. Your bag of coins. Okay, so that's what your portfolio simply means. Okay, so coins like Bitcoin, Ethereum, and like I said, they are high cap coin and they are less volatile compared to these smaller altcoins. Okay, now for example, I'll give you an example. Let's check the return on investment in Bitcoin between January and May. Now comparing it with the return on investment on BNB, on Dogecoin, and on KCS. Now, using Dogecoin, most people are familiar with Dogecoin. Remember in last class, or in the last 2 episodes, we analyzed the profit potential of Dogecoin if you invested in January. We said Dogecoin had, from January up until May, Dogecoin had done 12,000%. This is a space of 5 months. Now, comparing it with how many percent Bitcoin did from January to May, you see that they are far apart. They are very far apart. So this is the difference between huge cap coin and low cap coins. Low cap coins will give you profit in no time. Like, they have very exponential potential for growth. But large cap coins are going to be moving slowly but steadily. Okay, so this is the first thing you want to check. Like I said, if you don't have a personal tutor, if you're not in a community that is giving you recommendations from time to time, this is if you want to do it on your own. You can just go this way. Okay, so now let's talk about the types of strategies when it comes to building your portfolio. Please, if you can hear me, if you are getting value, please indicate and say, I'm getting value. I need to know that you're getting value tonight. Okay, so even as we go on, now we're going to look at 3 strategies as an investor generally, whether you're in a community or you're a lone ranger. Now, the conservative strategy, if you're a conservative investor, your strategy will probably look like this: 34% of large cap coins, 33% of medium cap coins, and 30% of low cap coins. Add it together, that makes 100%. So you probably invest 34% of your 1 million naira into Bitcoin, 33% into some other coins that they are medium cap, and then 33% into very volatile low cap coins. Now that is the conservative strategy for a conservative investor. The second strategy is the hidden gems. Now, some people have more risk appetite. They really came into this crypto space to milk the markets, to make money. So there are some gem coins. Like, if you're on my paid group, sometimes when I'm giving a signal, I tell you that this is a gem coin. Now, when you say a coin is a gem coin, that coin has a very solid use case. Just think about what a gem is in real life, and then you have an idea what that coin would do. And that coin has massive potential in the shortest time. Okay, and then the probability of that coin hitting the prediction is more than 50%. Okay, it's very, very much on the positive side. So these are gem coins, right? So some persons are apart from investing in these cap coins I just talked about, they go for these hidden gems. And of course, the truth is, hidden gem coins that's why they call them hidden gems. It takes a lot of research to uncover them. Most times these are tokens that people are not even paying attention to. So currently there are some hidden gems in the market that people are not even focused on really. And you'll be surprised that in the next few months, all of a sudden, that coin will just have an exponential increase. But then it's people, and then everybody will FOMO and get it. Hey, this coin. But some persons already started, acquiring that coin and accumulating it a long time ago. Now, these persons are the one that you see that they made 1,000%, they made 2,000%. Why? Because they took the pains to research this coin and invested in them a very long time ago. Okay, so So these are hidden gem coins, and of course, locating them or finding them is very time consuming. You have to do a lot and a lot of research. Now, the third one is the third strategy to building your portfolio is diversifying it across industries. Now, as time proceeds, we're going to talk about cryptocurrency classification. All cryptocurrencies are not the same. You hear a lot of them and you're wondering, why are they so different? Why are we hearing so many names? It's because they are not the same. Sometimes cryptocurrencies are classified based on their industries, all right? They are classified based on their utility or their industry, that is their use case. And this is why we always tell people, when you are investing in coins, don't just chase a coin for the sake of it. Understand what the use case of that coin is. Now, what's the use case of a coin? It's likened to the problem a business, like we're talking about traditional businesses now. The use case of a coin is likened to the problem that a traditional business is solving. All right, what is a bank solving? It's solving the problem about transaction, money. All right, so the use case of a particular coin is what that coin came to solve. So don't just think that people just invest in any random coin. No. The reasons why some cryptos are doing better than others is because they have a very solid use case. They are practical use cases. Okay, so you can also decide to invest based on the industry, the classification of coins. And I'm going to give you some, because this is not what we're focusing on today. Some cryptocurrencies are classified as pure currencies. Now, these are pure currencies that serve the normal need for exchange. All right, this is your Bitcoin, your Ripple. I hope you know that Ripple, the use case of Ripple was actually for cross-border payments. Ripple actually came as to solve that particular issue, and from the beginning, banks are actually supposed to adopt Ripple. You know, that was the original plan. Until the fact that, apart from the fact rather, that many banks are quite averse to cryptocurrencies, like I said. But the original case use of Ripple is to be used as cross-border payment. Okay, another example is Monero, XRM. You know, so many of them, Bitcoin Cash. These are pure cryptocurrencies. Why? Because their use cases were to solve exchange problem of exchange, money problems. Now, cryptocurrencies are also classified based on the blockchain platform. Now, I said earlier that not all cryptocurrencies are the same. There are some cryptocurrencies that are built on a blockchain platform like Ethereum. All right, so these are not for exchange. They're built on smart contracts, and then they allow dApps to run on them. So these cryptocurrencies, they stand as blockchain platform, and an example is Ethereum. I hope you know that Ethereum is not built for exchange. It's built as a platform on which other cryptocurrencies can be built. That's why you have a lot of cryptocurrencies built on the X blockchain. Do you understand? That's why you see that on some platform you can only swap from some tokens for Ethereum, e.g. Uniswap. Do you understand? So this is the second classification. You have those built to run as a blockchain platform. We have Ethereum, we have EOS, and I hope you know that EOS is a very good investment. EOS has done some pumps in the past, and in this deep is a good time to accumulate EOS. EOS has a very solid case use. Another one is Cardano, ADA. Why do you think ADA has been pumping? And ADA is set to hit $5 this year. Okay, so another one is VeChain. All right, you have Neo, you have Stellar, XLM. You know, these are blockchain cryptocurrencies. You have other ones. I talked about privacy coin at some point, and I think Chike last week emphasized on them too. And you saw how that he said privacy coin came to solve a problem when the USA started taxing cryptocurrencies. Okay, excuse me. People needed a coin too. People needed something to hide their income, and privacy coins came in handy, rather. Okay, so some of these privacy coins are Monero, Zcash, XVG, BTN, BTCP, KMD, NAFCON. You would see some of these tokens on Binance and you'd be wondering what they are used for or why they are there. This is what I'm explaining to you. So as an investor, you may want to invest across these industries based on case use, not just based on popular cryptocurrencies or market capitalization. You might want to say, okay, I'm going to invest 20% of my portfolio in privacy coins. Why? Because I feel like privacy coins are a thing. This year, people are looking into privacy coin. Everybody wants to hide their income. Nobody wants to be taxed. So I want to invest 20% of my portfolio into privacy coin. All right, so that might be your rationale for investing. Another category of coin is NFTs. We've been talking about NFTs, and I said that NFTs are a thing this year. They are something serious here. NFT has to do with digital art. All right, if you're a musician, if you're an artist, NFTs have to do with digital art, and there are some tokens around NFTs. So, for example, you have pet token. Pet token is an NFT. So you might also want to say, since NFTs are a thing this year, I want to invest in NFT. I'll go to Bakery Swap and I'll buy some of these NFT tokens. Another one is DeFi. All right, so you have a lot of DeFi projects, and these are the ones you trade on PancakeSwap most times. So you see, you can decide to invest based on the industry classification or the case use of these tokens, and I think that's a very smart way to invest, because you really understand. It helps you to really understand why you are investing and what you are investing in. It helps you to not just invest randomly because Bitcoin is the coin of the year, or because you hear people saying Bitcoin. No, it helps you to really know why you are investing if you are using this strategy. So I'm going to take it again. I said there are 3 strategies to investing as a newbie. You can use the conservative strategy, all right, by just randomly investing in the popular ones, Bitcoin, Ethereum, USDT or something. Then you can do, we're running out of time. You can also do hidden gems by doing a lot of research and focusing on the coins that people are not even looking at. Then you can decide to invest based on diversification across industries or based on case use. All right, so now how do you invest? It's very obvious, so we will not finish up what we have for tonight, but then I think we're just going to continue on Sunday, because we still have a couple of things to cover when it comes to investing. Okay, so how do you invest? Let's say you wanted to adopt the third strategy by investing based on case use, all right, or the blockchain industry. How do you do that? If you notice, I mentioned quite a number of tokens. These are just a few. All right, I mentioned a number of tokens for each of these industries or each of these case use. Now, ideally, if you really want to maximize this strategy, then you will have to research the top performing assets in each of these industry. All right, let's say you want to invest in the pure currency industry. Okay, you want to invest there. There are a couple of coins, many. So you have to research the top 10 in that industry and invest at least within 1 to 10. Okay, so if you want to invest, make sure you're investing in the first 10 in each of these industries. So if I want to invest in privacy coins, I do my research and I find the top 10 in this industry and I invest in, if possible, the 10 of them, or if possible, 3 or 4 or 5 of them. Okay, but then I hope you know that this takes a lot of work. This is a lot of work. It's not as easily said as easily done. It's a lot of work. Now, what's the point of this strategy? The point of this strategy is to make sure you're not overly investing in one particular industry. Okay, so if you're a conservative investor and you put your money in Bitcoin, Ethereum, and maybe BNB, in fact, BNB has a different use case from BNB is not exactly part of the pure currency industry. BNB has another case use. So let's say you're investing in BTC, Ethereum, and Bitcoin Cash. You just invested in one industry. Okay, you invested in only the pure currency industry because you're a conservative investor. And the truth is that there might be other industries that will outperform the pure currency industry, because just like every other industry, the crypto industry is evolving and people are getting bored with projects that are just coming to solve the problem of exchange. Because the reason is that we already have a lot of projects solving that problem. We have Bitcoin. Bitcoin is still in fact, if you want to do any of this transaction, you want to buy from a vendor, most likely you buy BTC or USDT. So we already have cryptos that are solving this problem. People don't want to invest in projects that are still solving the same problem. People want something innovative, do something new. Even if you're coming to solve an exchange problem, put some spice to it. So what am I saying? If you're a conservative investor and you just invested in these 3, you'd probably be missing out on making potential profit from these other industries. All right, so you might just see that you as a conservative investor, you invested in just these 3. it might take you so much time to make profit compared to an investor that has spread his investment across these three industries. The investor who decides to put 50% in privacy coins, 50% in NFTs, 50% in blockchain platform might make far more profit than you that just decided to buy only BTC and Ethereum. So you see why it's necessary to, diversify your portfolio, and actually, personally, I always recommend this last strategy. It's not a financial advice anyway. Like I said, eventually your investment will depend on your appetite for risk. Okay, so guys, basically these are the three strategies to invest as a newbie. But then everything I said has to do with a lot of work and a lot of research, if you notice properly. So the easiest way to do this, because you might not have time to do all of this, you might not know how to go about it, the technical details might just be very frustrating for you as a newbie. So the easiest way most times is to subscribe to a paid platform. A paid platform actually reduces your work because you're given coin recommendation from time to time. Okay, so basically this is how it works, and we're going to be wrapping up now so I can take questions. One more thing you should know is while you have money to whichever strategy you're choosing as an investor, maybe the first, second, or the third, you should also have some money aside to do regular trading, because of course you probably will be investing for the mid to long term, all right, in most of these cryptocurrencies. So you probably just invest and forget about them there. Okay, but you should also have some money, especially if you're on a paid platform, that you can use to trade, for maybe 2 weeks, buy a coin, 2 weeks, make 30%, get out of the trade, buy a coin for 1 month, make 50%. You should have that kind of money that you can use for regular trading, apart from the long-term trade. Okay, guys, so I believe you followed through everything we've talked about today. If you got some value, indicate in the Zoom chat box and say, I got value, I got value, I got value. All right, so I'll be taking questions because this meeting ends in the next 3 minutes. All right, so I'll quickly take questions. If you have a question, kindly drop them in the Zoom chat box and I'll attend to them. Okay, awesome. Someone said, how much for the paid platform? I'll drop my number so you can feel free to ask me any question in my inbox. Okay, so for everyone who wants to join the paid platform, kindly inbox me, send me a message, and that's my WhatsApp contact. All right, so if you got value, kindly say that on the Zoom chat box. I got value, I got value. Okay, awesome. Thanks guys for all the responses. Gabriel is saying he got value. Christopher is saying he got value. Jeffrey is saying he got value. And of course, many much more value to come in the next few days. All right, so like I said, we have not exhausted this topic. This topic is actually very broad, but then by the time we are done, you will know how to invest as a newbie. You know how to strategize, how to arrange your portfolio, and in such a way that you can profit properly from this industry. Okay guys, so the next edition of Crypto Over Coffee is Sunday, and you wouldn't want to miss it because we still have a lot to talk about, a lot that will blow your mind. We still have some really key things that you need to know as a newbie. All right, so we're going to be talking about blue chip cryptocurrency. We're going to be talking about DeFi blue chips. We're going to be covering a lot on Sunday. So please do not miss Sunday's class. It's going to be awesome. We're delving into the nitty-gritty of blockchain. I mean, we've done all the introductory parts in the previous episode. This next episode, we're entering, they're going to be so much valuable. They're going to be amazing. I don't have the words to describe them. And also next week we're going to be having another guest, and this one is going to blow your mind. I've told you that I have amazing blockchain friends, and they're just wow. If you were on the program last week, you would know that you got a lot of value. I'm yet to recover from last week's episode. I mean, I've been listening over and over and over. So next week we're going to have an amazing guest, and it's coming all the way from Dubai. Okay, you really want to hear this guy. This guy lives, breathes in and out blockchain. Like, he eats and sleeps with blockchain. I mean, blockchain is his life. You really want to hear him. All right, so if I were you, I would not miss Sunday's class. I would not miss next week's class, because it's going to be amazing. All right, guys, is there any other question? Okay, someone is saying I need the video for this. The videos are going to be hitting our YouTube channel tomorrow, so be on the lookout. I'm going to drop the link in the WhatsApp group chat. So the videos are going to hit YouTube channel. Make sure to go there and watch them if you missed any part. All right. Oh, thank you very much. I want to say my voice is excess value. Thank you so much. I appreciate that. All right, guys. Once again, thank you so much for joining in. It's still your favorite show, Crypto Over Coffee, and I remain your host, Ileke. See you on Sunday. Bye.